And now we move on to a session which is focusing very much on the challenges, one of the main challenges that Chinese firms face when they look out of China and try to invest overseas. In my initial presentation, I alluded to the fact that Chinese firms often find the governmental aspects of operating overseas quite difficult and challenging, that the welcomeness of foreign firms to Chinese inwards investment varies quite markedly around the world and actually varies quite markedly from one sector to another. I know this is an issue that a number of Chinese companies have struggled with over the years. I mentioned Huawei as a specific case study because it's in the news recently, but there are many other Chinese firms which have gone overseas and had to face some quite difficult challenges in terms of establishing their reputation and brand and building good relations with host governments. So we felt that it was appropriate during this session to bring some representatives of Western governments where a number of Chinese firms are already operating and have a discussion about some of the attitudes of those economies to Chinese inbound investment and perhaps provide some advice as how Chinese firms could perhaps best go about navigating some of the pitfalls that occur whenever any firm tries to invest overseas. Now, in order to moderate that session, my colleague Alex van Kemenade is going to join me on stage, and he will be moderating a group of people from embassies based here in Beijing who represent foreign Western countries where businesses invest. Alex is our head of custom research for the Greater China region, so he's been with us in that capacity just for a few months, but prior to that was Deputy Director of our Access China service, again based here in Beijing, focusing on domestic issues within China, looking at what was happening at the provincial and city level within the Chinese economy. Alex took a break between those two roles in order to study for his MSc back at a university in London, but actually he's been living in China for 20 years now. He's fluent in Mandarin, but I think this session is going to take place in English. And so, Alex, if you'd like to join me on stage and introduce your panel. Oh, okay.
Thank you very much for the kind introduction, Robin, and also for Pat for a very invigorating and yet also sobering perspective on the challenges and opportunities that Chinese companies face as they expand in Africa. I think one thing to always bear in mind is that just as investors face challenges and opportunities, so do host country governments around the world as they respond to this rising tide of Chinese outbound investment. Now, on the one hand, today we are seeing annual outbound direct investment flows from China in excess of $100 billion, and that certainly is a very welcome development from a lot of countries' perspectives, particularly in today's post-crisis sort of capital-starved world. On the other hand, we also see growing apprehension in public opinion in many countries in response to this growing wave of Chinese outbound investment, and that in turn is placing pressure on host country governments to respond. So joining me today, we have the distinguished representatives from 3 host country governments in Beijing. From the US Embassy, we have Mr. Hanscom Smith, who's Minister Counsellor for Economic Affairs. Would you like to join me on stage, Hanscom? From the Embassy of Canada, we have Wallace, who is Team Leader and Trade Commissioner for Investment. And from the Embassy of Spain, we have Mr. José Luis Kaiser Moreiras, if I say that correctly, who is Economic and Commercial Counsellor. So please, would you join me in welcoming our panelists today? Please have a seat. Let me move this way so I can see. Thank you. Mr. Ip, would you perhaps like to kick things off for us today? How would you characterize the Canadian experience with Chinese inbound investment to date?
I think, as everybody has seen recently in the media, that there's a significant amount of Chinese interest in Canada, and naturally in the energy and mining sectors. Based on our own estimates, I think about around 3/4 of foreign direct investment in Canada is currently in the oil sands and energy side, and then the remainder captured mostly in the mining side, with some investments in green energy. I think particularly for the Canadian public, I think this is an interesting development, largely because Canada is a country that needs significant resources and investments to develop its abundant natural resources. And we're very well positioned to be the global supplier for energy products. And what that really means is that there's a lot of complementarity between what Canada has to offer and what China needs. And that in itself is a fundamental, I guess, shift in what Canada traditionally receives as foreign direct investment. And with that, I think there's a lot of inexperience from both sides, both from Chinese investors who are looking to internationalize and to gain some of the things that the other presenters have talked about, including branding, reputation, legitimacy, and so on. But on the flip side, I think from the Canadian side, it's also a bit of a learning experience. It's that how do you work with investors who have significant resources, but perhaps not have the same domestic framework, and how to deal with that. I think overall for us, it's been a very good experience, and I think moving forward, I think we'll see even more shift towards areas in clean tech, in automotive, and high-tech investments. I think that's inevitable, and that's something we'll work towards in terms of our policy development to make sure that we meet those demands and those needs.
Thank you. Mr. Smith, does the U.S., you also say it's been an overall positive experience?
We've seen recently a great surge in Chinese inbound investment in the U.S. By one estimate, last year the U.S. received $6.5 billion in Chinese investment. And one of the biggest investors last year was in an area people might not necessarily expect. That was Dali and Wanda Group bought one of our large cinema chains. So far in the first quarter of this year, we've seen about $2.2 billion in deals. And that's a combination of both M&A and greenfield. And again, very diverse. We've seen deals in the technology sectors, in real estate, and in energy. So I think that reflects the coming trend that we're seeing an increasing interest in Chinese investors across a broad range of both geographic areas and sectors.
And Mr. Kaiser, how would Spain's experience has been perhaps somewhat different, you might say?
Well, maybe we are the youngest brother in this panel because our experience is shorter both in terms of time and in terms of amount. We have received some Chinese investment, but it amounts up to 3 million euros since the beginning of the 90s. And 2/3 of this amount accounts from only one operation, and it's been a recent one. It's the Hainan Airlines operation with NH Hotels in the tourist sector. So what we see is that there has been a positive experience, and we see an increasing interest in Chinese companies in investing in Spain. Probably we are less known as a country and as an economy as like the US or Canada are, but and sometimes we are on the news not for positive news, but for the risk premium, the debt crisis in Europe. But as your previous speaker said today, we have been doing a huge effort in terms of adjustment. We are a very competitive economy. I'm a frequent reader of The Economist, and I remember that in 2007, used to say that we had a deviation of 20 to 25% in terms of unit labor cost compared to Germany or France. And since the first quarter of 2008, we have corrected 15 percentage points. So either we have corrected 2/3 or 3/4 of this deviation only in 4 years. And we have seen that in terms of our export quota and of external competitiveness. So now we are doing better, and we have corrected most of our imbalances internally.
Okay. Just to be clear, you say the correction in unit labor cost and Spanish competitiveness, that's been a direct result of the Eurozone crisis?
No. I mean, in the past, before the euro was created, we corrected our imbalances by devaluating the currency. Now we cannot do that, so it is only by increasing productivity or reducing unit labor cost, the only way we can increase our competitiveness. So, and we have, by increasing the productivity of our companies and by reducing and moderating wage increases, we have reduced the unit labor cost gap between Spain and Germany or France by 15 percentage points.
Mm-hmm. So there's a silver lining to the cloud, I suppose.
Yeah, it has been a huge effort, yeah. Mm-hmm.
And just to continue for one more moment on the current economic climate in Spain, I mean, how much of an impact do you think that is having on investor sentiment, particularly foreign investors in Spain? And moreover, would you say that certainly clearly in recent months we've seen a lot of assets go on for sale by various Spanish banks as a result of the very widespread sort of restructuring program that is going on. Do you think there may be investment opportunities there for foreign investors?
There is plenty of investment opportunities because maybe we can have a duality between what are the multinational companies, the Spanish multinationals. Most of them are well known here in China and for sure in Europe. In the telecom sector, our banks are very well reputed in Europe and in the world. But we see that some small and medium-sized enterprises are struggling in terms of financing, in terms of credit, because they don't have that reputation, they don't have that international focus on their activity. And there are quite a few investment opportunities because they are competitive, they have a high degree of technology in their operations. They are in good shape, but they need financing. And now, prices are quite competitive, but are not going to be this low forever. So right now, it's a very good opportunity to invest in Spain.
Thank you very much. Mr. Smith, the economic situation in the U.S., although the worst seems to be behind you, I wouldn't say you were out of the woods quite yet. Nonetheless, despite recent economic woes, I think the U.S. is still seen by many investors in China as sort of the holy grail. It's one of the world's largest markets. It's rich in terms of its technology stock, its brand stock, also in terms of resources. What does it take to succeed in the world's largest economy? I mean, what sort of Chinese companies are doing well there?
I think that we have a very diverse range of companies that have been successful. I think that, as you say, our economy is one of the most open and competitive in the world, and so people take advantage in particular of our educated workforce and the large size of our market, as well as the benefits of, for example, NAFTA membership and some of our other bilateral trade agreements. But at the same time, I think that Chinese investors who are starting to go to the U.S. are starting to learn about some of the practical considerations of doing business in the United States. That often involves hiring lawyers, public relations firms, accountants, and other service providers that may not necessarily be as familiar to people coming not just from the Chinese market, but from other foreign markets. So we certainly, when talking to potential investors, highlight some of the practical business realities of doing business there. I think the firms that have been successful in the U.S. Have worked effectively with service providers, realized the importance of those service providers, and also at the same time built very strong relations with local communities.
Mm-hmm. And Mr. Yip, you mentioned your government's efforts to attract a more diverse portfolio of investments, not just in natural resources, essentially. Could you highlight some concrete steps that your government is taking to achieve that goal?
Mm-hmm. I think absolutely. I think from a policies perspective, we've done a number of things. You know, apart from doing more investment promotion to highlight the value proposition for Canada, especially in the high-tech sector. I think when a lot of investors, and I don't think this is unique to Chinese investors, Sumo says that they think of Canada as an energy and mining resources country. However, so we do a bit more legwork nowadays to highlight, you know, our access to high technology. And as my colleague from the U.S. has mentioned, is that Canada is a small market, but in itself, because of our bilateral agreements, there's a lot of access to the U.S. market, to North American and South American markets. So the combination of that, we highlight those issues and to make it as easy as possible to do business. To start a business in Canada and to ensure that we have the right incentives from a taxation perspective to make sure that the Chinese are as comfortable as possible to do business. And on top of that, we highlighted some more proactive policies. One is related to a new program that we've started. It's called a Startup Visa Entrepreneurship Program. And the idea is to attract innovative entrepreneurs who are interested in establishing full permanent residency in Canada so that we streamline this process to ensure that those people who can benefit the Canadian economy at the same time who have a long-term outlook to ensure that they get what they need for themselves and also their family to have a life in Canada. And then on top of that, the Canadian government also looks at venture capital being a very important aspect of developing Canadian startups in the high technology sector, and the Chinese happen to also understand that. So we've announced a $400 million fund to attract funds of funds, private investors, and venture capitalists to ensure that they have the opportunity to access this. So those collective policies used to highlight what we've talked about earlier, is to diversify into other areas of investment.
You mentioned visas. Now, I hate to dwell on such a mundane issue, but this really seems to be a kind of a perennial issue that never seems to go away. You know, in multiple surveys that we've done in the past few years, when we ask Chinese investors what are some of the obstacles they face when they invest internationally, visas always come up. What is the issue there? I mean, presumably, if you want people to invest in your countries, you're going to have to allow them in at some point, right? I mean, has there been any movement on the visa issue in recent years? You know, what's the latest? Would anyone care to?
I know on our side, we've worked very hard here throughout China, both at the embassy here in Beijing and at our consulates, to reduce the waiting time for visa processing, and that's been very successful, so that even during the busiest times of year, which are typically in the summer, wait times can be a week or less to obtain a visa to go to the United States. And we've seen very large increases in the numbers of Chinese traveling to the U.S. for a variety of reasons. At the same time, although we do have different investor visa programs, we also highlight the fact that you don't need a special visa to invest in the United States. Everyone is welcome, so there are a lot of different options for people who do want to invest in America.
In the case of Spain, we don't have right now a specific investor visa program, but the new regulation is on the way, and probably by this year, by the end of this year, we will have a new regulation on this resident visa for investors, because well, it is kind of a understandable request for an investor in particular if they go for real estate and they want to buy a house for their children to study in Spain or to live in Spain for some months, enjoying the good weather and the good quality of life there. They will like to enter the country with no restrictions. We don't have that regulation, but we'll have that in the very near future, because we think it's an understandable request. And also, right now there are no restrictions to invest in Spain, either in real estate or in any other sectors. And there are some visa possibilities that could help investors that are thinking right now to invest in Spain until this new regulation has passed through Parliament and it's approved probably in the last quarter of this year.
Mm-hmm. Thank you.
Sorry, if I may just add on the visa side for Canada, I think there's a stronger perception that it's difficult to get a visa than there is in reality. I think with a 20% jump year on year in visa demand, I think it's natural that there's a bit of a backlog, but our service standard remain at 5 business days for business visas. And we've introduced the possibility of having a 10-year visa or up to the duration of the validity of the passport. So all of that has actually helped streamline the process and to make it a lot easier to do your business and to travel to Canada.
Okay. Mr. Abe, just to return to the energy issue, which we touched upon previously, one of the largest energy deals ever to come out of China was closed recently. I think you know which one I'm talking about. This was CNOOC's recent acquisition of Nexen. Now, for I think some people in China, this deal marked, how would you say, CNOOC's kind of redemption after running into a wall 8 years ago when they tried to acquire Unocal in the US. Yet, your Prime Minister seemed to have some regrets after the fact and suggested that the Nexen deal might be the last of its kind to occur in Canada. Now, could you please clarify for our audience today what exactly the government's position is on foreign investment in the energy sector in Canada?
Mm-hmm. I think maybe to characterize that it was a regret, it's probably maybe a little bit too strong. I think specifically, at the time of the CNOOC Nexen transaction happened, there was also one by Petronas on Progress Energy. Not as significant of a value, but still a significant investment in Canada. I think the clarification that came through from the Government of Canada, and it remains today, is that we're very much welcoming foreign investment. We're very much supportive of an environment that supports energy investments. We recognize all of that. I think the key is to specify the rules and to ensure that any foreign investors, private or SOE or otherwise, who invest in Canada follow strictly free market principles, is supportive and is in Canadian interest. I think all of that together is what we're trying to convey. In terms of the actual decision-making process of CNOOC Nexen, I think it was a difficult decision for a number of reasons, particularly maybe for the Canadian public as well, is that this understanding, as I talked about earlier, is that, well, how do we manage investments from China and some of the emerging markets? I think that's a big part of it. Even though it was a difficult discussion to have and an uncomfortable one, I think it was one that was necessary. We benefit from the fact that there remains to be significant Chinese interest in Canada, and we'll continue to have that opportunity to ensure that our policy aligns with interest. So now that we've started the discussion, I think further down the road we'll be in better shape into dealing with not only just energy investments, but other sizable interests as well.
And when you say that investors should be market controlled, does that mean SOEs, or specifically does that mean no SOEs?
No, I think the rules clarify so that for the Investment Canada Act in particular is that SOEs would be subjected to the threshold of, I think for this year, is $344 million. So if you make investments beyond that, then it's subject to a review or a potential review. And for private investors, that will be slowly changing, is that we've clarified that for private investors, we're moving towards the threshold to be a $1 billion mark over the next 4 years. So that in itself will change slowly.
Thank you very much. Mr. Smith, the United States is not a stranger to political intervention in deals. Now in particular, the technology sector has been particularly contentious, what with recent announcements on cybersecurity, as well as measures amounting to the blacklisting of certain ICT firms in the United States for business. Now, that has led some in China to conclude that the high-tech sector in the US is essentially off limits. Would you say that was a fair characterization?
No. Chinese high technology companies do invest in the United States. I'll just quickly characterize our investment policy. We have a process in the federal government called the Committee on Foreign Investment in the United States. The acronym is known as CFIUS, and the United States welcomes investment from all countries. Greenfield investment, passive minority stakes, land investment don't come under the CFIUS process. CFIUS looks only at investments that have a national security issue. And the same rules apply to investments from any sort of company from any country. And there are no positive or negative lists of different sectors that are forbidden. So we go from the principle of openness to all investors, and then when there is a national security concern, and that's a very small number of cases, that's the only time that CFIUS is invoked. So we have seen, as I mentioned earlier, some of the statistics, a surge in Chinese investment, and we're seeing that in a variety of sectors, including the technology sector, and that's, I think, an indication of the openness of our market to foreign investment.
Thank you. Moving on to sunnier topics. Mr. Kaiser, you mentioned yourself that Spain may be perhaps still a little brother in terms of attracting investment from China, and that there may be some issues relating to the perception of Spain in investors' minds, which is essentially that it's a great place to travel, but perhaps not the most dynamic place to do business. And you mentioned that there were ongoing efforts by the government to try to redirect, or let's say to encourage more investment in non-tourism sectors, non-property sectors. How are you making that work?
Well, traditionally we have been, and we are a global leader in terms of tourism. And regarding the Chinese market, we have a very high degree of fidelity for Chinese travelers to Spain. But I mean, now we are suffering the problems of focusing on the real estate sector and on building sector. And we know that that's not the growth model for the future, and that we need to focus more on high-tech sectors and green tech sectors. And that's the main purpose of the different reforms. We last year we undertook the heaviest part of the reforms in the fiscal reform, the financial reform, and the labor market reform. And now we are focusing on different markets and increasing the flexibility of markets. We have, as I said before, very well-known multinational companies in the telecom sectors, in infrastructures, in the aeronautics sectors. 3 out of 5 flights around the world are controlled by Spanish navigation systems. We have banks that are leaders in the world market, but there are many small and medium-sized enterprises in the information and communication tech sector, biotechnology, renewable energies, the automobile. We have most of the largest world manufacturers in Spain, and we have a second to none auto components and spare parts producers and industry in Spain. We are very well known in China, and a foreign company that wishes to invest in Spain does not only have to think of on the Spanish market. We have a 43 million consumer market with medium-high disposable income, but also we have a very good location for doing business internationally. We have been the second largest investor in Latin America. We have a very well-known experience and know-how investing in Latin America. We have a very close access to North Africa, and we have a free access to the European single market. So, I mean, there are very good opportunities in these sectors. I mentioned biotech, ICT, renewable energies, automobile, besides real estate and tourism. And also, an investor, a foreign investor should think in global terms, not only in the Spanish market, because also as a strategic location and in terms of logistics and transport, we are also very competitive.
You mentioned structural reforms and some labor market reforms in particular. Now, I know this has been on the agenda in multiple European countries for, I'd say, over a decade now, in relation to improving competitiveness. I mean, are there signs that this is really going to become real? Or?
Well, probably of the three pillars of the structural reforms, the labor market reform is the slowest one because it takes more time to see the results. But there are some positive signs in terms of employment right now in the Spanish labor market. As you are aware, we have a very high unemployment rate. But on the other hand, we have a very highly qualified working force. We have done a huge effort reducing unit labor cost, and the positive signs will take time to show, but we see now very tiny signs of recovery in the labor market. But the commitment of the government is straightforward, and they are going to continue doing what it takes to solve these structural imbalances we had. I mean, the labor market imbalance has been a traditional one in Spain, and now it's probably the biggest problem that the new government has to face, and they will do what it takes to solve it.
And if I understand you correctly, the proposition is that Chinese investors actually conduct export manufacturing in Spain. Is that correct?
Yeah.
Okay. Mm-hmm. Well, that would be a different world almost. I think. Thank you very much. I'd like to open up the floor to questions from the audience. I think we have time for maybe just a couple. Is there anyone who would like to address a question to one of our panelists? The gentleman over there in the back.
Okay. I have two questions to Mr. Smith. The first question is, you just mentioned about the investment from China last year was recorded at $6.5 billion. So what's the percentage of that of the total investment from outside the United States? That's my first question. The second question is, you mentioned about, of course, Chinese company, when they go outbound, and in particular go to US, they need to be prepared to learn the rules and the games. And in terms of the US side, you mentioned about a few ways that the government is putting together to help to attract Chinese investment. But from my understanding, beyond that, there could be other ways that psychologically because people grew up there and still believe this is a red communist country. So there's some fundamental difference in terms of feelings of Chinese investment coming to U.S. So what did the government, or how the Americans are prepared for these kind of a new wave of investment into U.S.? Thank you.
Well, on your first question, I don't have that exact statistic. I believe you asked the percentage of Chinese investment as a percentage of total inbound investment. It's still a minority, of course, but growing quickly. I don't have the detailed stat for you. The second issue is, in some cases, I think it's a case of mutual education. We have a federal government program called Select USA, which highlights attracting inbound foreign investment. But traditionally, our investment efforts have been led by the different states and municipalities. For example, here in China, about 40 different US states and in a couple of cities as well have representative offices, typically in Beijing and Shanghai, and they work very hard to attract a specific Chinese investment. At the same time, we talk to Chinese investors about doing business in the US, the fact that it is a federal system, and we talk to the states about the format that Chinese investors like, which is often a project list. And so many of the states have very active outreach programs. So I think that when Chinese investors travel to the US, or when many of, for example, our governors and also mayors come here, just last month we had Governor Brown of California, as well as the governors of South Dakota, Virginia, Wisconsin, and Iowa, all spend quite a bit of time in China, not just in the coastal cities, but inland as well. I think the Chinese get the message that their investment is welcome in the United States, and at the same time, the states are becoming increasingly savvy, as we are in the federal government, about how best to attract investment and let people know about the opportunities in the U.S.
I'm afraid I'm going to have to bring the session to a close right now because we're running out of time.